Hello to all of our Money Show active traders and investors. This is Ken Calhoun from TradeMastery.com with an exclusive for Money Show with our breakout charts of the week. We've got 3 swing trading charts and 1 intraday chart that I'm sure you'll like to look at in this week's featured episode. As always, all information is for educational use only. I'm not making any advice or recommendations about what to buy, sell, or hold, and by watching this you agree not to make actual trades. You may have seen me speak at the Money Show Traders Expos and Money Show events, as well as seen me elsewhere around the active trading media network. Anyway, let's take a look at our featured charts this week. The first one is SQM. This is a 90-day daily candlestick chart. My favorite chart patterns are these, in which we have a sustainable 45-degree angle tight channel breakout run. The volatility is especially good on this chart, going all the way from 34 up to 48. So a 14-point run. And what I like about it is the recent large green candles. So despite a minor pullback here, it may be worth a look if it does manage to take out new highs coming up soon. One of the things to look for too is increasing volume and volatility at new highs. And if you take a look at this, you'll see that this is a 15-day, 15-minute candlestick chart. It's got what I call an acceleration ramp. If you've ever seen me at the Money Show Traders Expos, you know that this is one of my favorite patterns that I've taught thousands of traders over the last 20 years. A steady uptrend followed by kind of a hockey stick sharp angle breakout. We stay clear of it. I do not buy bounces and pullbacks, so I would never in a million years buy right here because it may collapse and keep going down. But if it does take out new highs above the prior high on a continuation run, that makes sense for a breakout play. So SQM, very healthy on both the 15-day chart and the 90-day chart with a good explosive upside, high volume, high volatility breakout pattern. Next up to bat, we've got KEM. KEM, the ticker. Again, this has a similar pattern. What you're looking for, what I look for when I put on my own swing trades, is a steady uptrend that's got a relatively sharp flurry of buying activity in the most recent trading week. And as I've mentioned in an earlier episode, we look for the ratio of green to red candles. And I like to see at least 3 or 4 out of 5. A majority of candles should be green, especially good when you have large, tall green candles that are larger. The whole real body is larger than the previous week's candles on average, right? We've got at least twice the whole real body height on increasing volume profile up at a 90-day high in KEM. So that's a good one to follow up on as well. On the 15-day chart basis, you can see that it's also got a good explosive breakout chart profile. Another pattern to look for is when you look at these 15-day candlestick charts, always be on the lookout to see what the sentiment of the buyers or the sellers of the instrument is at the right side of a bullish cup pattern. And do you get a handle? Do you get a pullback? Do you get chop and churn? Do you get a false breakout? You can get one or more of all of those. What I look for is a breakout on the day after the day that it breaks a cup pattern high on a 15-day chart. So we have the breakout day, which is nice, but odds are I will not enter there. I instead wait until we got a nice high velocity breakout chart like we had here on August 30th, characterized by large green candles, a minor gap continuation, a minor window to the upside, which led to a nice breakout pattern on the 15-day chart following a bullish cup. So that's a good sensible continuous chart that looks like buyers are firmly in charge of it, as it just doubled right from 12 to 24. So we've got a hammer down here off the 100 SMA, which is all well and fine, but what I care about is the upper right side of the chart. Where can I make money trading this potentially? And it would be if and only if it's able to climb up to new highs above resistance. So we'll see if KEM continues up. And the third of and last and least of our swing trading charts, for those of you who like cheap charts, I thought this one might make interesting dialogue, is GLUU, G-L-U-U, the ticker, G-L-U-U. And for a $2 or $3 stock, I typically intensely dislike these kind of charts because they tend to be less consistent than others. But this one does look good. It's got a reasonably strong acceleration ramp type pattern, steady uptrend followed by a sharper angle breakout that's lasted for the entire month of August. So the August cup Notice what I said too about the cup pattern. At the cup pattern high here, we had a false breakout and it pulled back. Eventually, it did keep going on up to the tune of almost another full point. So this guy's gone from 2.4, 2.5, up to over 3.5. So for those of you who do trade cheap instruments, I think that's not a good idea. But personally, I like trading stocks in the $20, $30, $40 share range or so because they have better consistency as a rule of thumb. This is kind of like a unicorn. Very difficult to find a cheap chart that has any kind of consistency week after week. But this one does. So I thought I would bring it to your attention as an example of if you do trade cheap charts, they should go a little something like this with some consistency. Very hard to find. The vast majority of charts under $10 or $20 a share are inconsistently up and down and very haphazard and not very strong. But this one does look okay, GLUU. So that's the three swing trading tickers, SQM, KEM, and GLUU. For an intraday chart, I thought I would bring this one to your attention. Impax Lab IPXL, the ticker. And what I like about this one is not only does it have on a 2-day 1-minute candlestick chart, which this is a nice bullish cup breakout, but you can see that the point range is all the way from 18 whole number support up to over 21, right? Over a 3-point run on a $20 stock, which is outstanding. And the way that I teach traders is I will usually use, say, 20 cents or so above a high, to get in right above a whole number and then sell right into the nearest whole number. And then you can always cycle back in at 2020, out at 2080, back in at 2120, and maybe a scratch trade. So 2 wins and a scratch with that approach. The approach is, what I like to do is I'll go in long just around 20 cents or so above a whole number at a 2-day high with an exit target of just under the nearest whole number, which in this case was 20. Because, back here we didn't know it was going to keep running up here. So I'm fine buying 1920, selling 1980. Buying 2020 again for another shot at it, buying 20 and then selling at 20.80 at this whole number resistance. So that's a good strategy to look at, is buying right above a whole number, selling right underneath the nearest whole number. Rebuying if it keeps going up above the nearest whole number, then selling right under the next whole number and so forth. But anyway, this type of chart, and one of the reasons I thought I'd bring this to your attention is think about the profit potential in this chart for either a swing or a day trade. This has 3 points of run in it for a $20 instrument with pretty much unbroken, spectacularly strong breakout potential. This is so much smarter to day trade than the stupid under $10 low float stocks that some people are mistakenly deceiving the public into thinking that you're supposed to day trade penny stocks or day trade $3 stocks. The 2 words I have for that approach are epic fail. Epic fail. Something the millennials would likely say. But the point is, you want charts as a day trader with liquidity and volatility. You want volume and volatility. So I like to trade instruments with at least 15,000 shares per minute that have at least a nice 1-point trading range. And these type of charts like this make a whole lot more sense than trading, say, a $5 stock trying to scalp thousands of shares for a nickel or a dime or 15 cents. That blows up people's trading accounts because the upfront risk is too big. Much smarter to trade just a few hundred shares even of a stock like this that's got multiple points of consistent range that make for a much easier trade setup, right? So you should always be on the lookout for charts with multiple points that have good volume and good consistent trends, right? You could have thrown darts at this guy all day long this morning and come out smelling like a champ. I mean, maybe unless you waited to way up here and bought and got stopped. But for the rest of us, we buy the open range breakout within the point ranges and make a go of it. So anyway, that'll do it for this week's episode of Breakout Chart of the Week. This is Ken Calhoun, president of the original DayTradingUniversity.com and TradeMastery.com. Wishing you the best. Remember, trade intelligently, trade with real tight stops, try and make as much money as you can in your trades, and let's go get them. So until next time, take care and best wishes for success in your active trades.